Kulin Lalbhai, director with Arvind Fashions, joins us now. Let's take our conversation forward with him to understand that which way he thinks that consumer trends are moving, what is happening to the portfolios which the firm represents, and where in general the footfalls are going to move from 2000 in 2023. Kulin, good morning. Thank you for joining us. Uh,
Good morning.
if I may request you to first summarize the year gone by for us, what to your mind was the standout trend? Because the brands which you represent are very aspirational and are very urban focused brands. What did we see with the urban consumer in 2022 as a standout trend?
I think 2022 was a year where the offline part of the business saw a great resurgence. I think after many years of COVID, the consumers actually wanted to come out and spend towards these kind of impulse purchases. So if you go to any mall in India over a weekend, they're completely packed, and this is healthy full price sales happening, not sales which are induced through discounting. So in that sense, there's been a huge resurgence of the offline side of the business. It's much higher than where it was pre-COVID, and it shows that that consumption has come back in a strong way. Another trend which one saw was that there were certain categories which had gotten subdued in COVID times because of work from home. Those categories have also come back. So the formal wear part of the business has come back. Weddings, the weddings were subdued for many years, and now this is a season where there are big weddings back in the market. So wedding purchases have come back. So I would think these are the two big trends of 2022.
The term which we freely used in 2022 is revenge shopping, buying buying more largely because you did not buy in 2020 and 2021. Do you see a lot of this sugar rush which we've seen in 2022 will normalize? So on a base effect, the year will be better, but we will see this entire sugar rush moving out.
I actually see it a little differently. I see COVID as a brief interruption in a very structural new trend in the market. Post liberalization, India consumes very differently. If you go to a college student today, or someone who's just in a first job, earning a 30,000 rupee salary, you'll be surprised that they may want to purchase a 5,000 rupee branded shirt just because it's a symbol that they have arrived in life. I think that sort of consumption is here to stay. If at all, I think it will accelerate because India is at a 2,500 per capita GDP, and as we move towards that 4,000 mark, a large part of middle class India will start consuming differently. So I think the structural change towards buying branded goods, and that being something that is a consumerism that has come into the modern Indian lifestyle, I think that is the mega trend, and COVID was a brief blip. So you can assume, you may have a quarter of some bunched up consumption happening because COVID had subdued it. But if you really zoom out, the trend to look at is this trend of consumption that is here to stay.
We've seen while demand is back, we've also seen massive inflation. Cotton prices have been on a tear. Yarn prices have been all over the place. What are your assumptions for 2023? If things normalize on the raw material front, largely cotton and yarn and fabric, are is Arvind Fashion in for a strong margin expansion then? Because if demand is strong and if raw material is down, that will lead to margin expansion because discounting is not there now.
Yeah, so we were quite positively surprised that when the prices went up by 7-8%, there was no impact in 2022 on the sell-throughs. So the full price sell-throughs did not get impacted. And that was when cotton had peaked out at 1 lakh rupee per candy, and it's corrected now down to 65,000. There is always a 6-month lag between cotton correction to that becoming visible in the P&L of companies, because all apparel companies buy 4 to 5 months ahead of when the product actually reaches the market. So from June onwards, I would say most companies would be able to see the benefit of the cotton correction. Remains to be seen how much of it, would get passed on and how brands look at their pricing strategy June onwards. But you are right that with the correction in raw material cost, there should be an advantage for the industry.
Kulin, what we wanted to understand is if you could just help us understand the various brands under Arvind and how each of them are performing and whether you're looking at narrowing that pool further.
Yeah, so we set out on a consolidation where we stepped away from businesses which we believed would not, have strong bottom line performance and return on capital employed performance in the medium term. So what we have now are these 5, 6 leading brands which are all profitable, and our focus in the next 3 years is to create 1,000 crore plus brands. Because in our business, when you have very large brands, that's when the operating leverage kicks in. That's when there is much higher profitability and return on capital employed. So we already have one brand which is a lot larger than 1,000 crores. In fact, US Polo reached 1,000 crore mark by October of this year. So it's emerging as the largest brand in the casual wear space in India. So it is a very, very dominant brand. And then we have multiple brands, in different consumption segments, which are in the 500 crore mark. We have Arrow, which is our formal and occasion wear brand, which is also scaling up very well. We have Flying Machine on the youth wear side, on the denim youth side, which focuses on the Gen Z millennial customer, which is scaling up well with, where we have a strategic relationship with the Flipkart group. So it's very vibrant in the online side. And now we are ramping it up in small town India. Tommy and Calvin Klein are the two most dominant brands in the bridge to luxury market. We almost have 70-80% market share in that space. And they put together a very large franchise now, again, scaling up very well. And then we have our beauty business, Sephora, which is also scaling. So I think each of the brands we have are in very distinct segments. They're leaders in their segments. And, over the next 3 years, as all of them, move towards that 1,000 crore mark, you will see a different and a much healthier profitability and return on capital employed overall for the portfolio.
Quantify that much better return on profitability. Could we assume then that when it comes to your revenues, given that you're talking about strong trends, this resurgence in offline, that revenues could cross the 4,000 crore mark in FY23 after 3 long years?
Yes, on revenue, we do expect to be of that kind of scale. And we have multiple growth drivers, in the business. We are opening 200 stores every year. Online, we are the dominant company in our space, and we continue to grow that very actively. We've got new categories like footwear, innerwear, and kidswear, which are growing much faster than the core business because they are at a smaller base. So we believe, we can grow this business at 12 to 15% year on year with these growth drivers. And on the profitability front, we are high single digit right now. We've achieved around a return of capital, a ROCE of around 15% right now. And, we believe that in 12 months, we should get to our power brands profitability becoming double digit pre-Ind AS, and maybe overall as a company achieving pre-Ind AS double digit EBITDA, in 18 months or so. And with that, our return on capital employed and free cash flow generation should further go up.
Okay. Just an extension of that, the point that I was earlier making, I wanted to understand what is it that you're planning to do with Sephora? Because, that's still at EBITDA break-even levels amidst all the buzz doing the rounds in the street that some of the mega conglomerates are vying to buy Sephora off you.
No, so I won't comment on market speculation, but I think Sephora is a very dominant brand. I think we've had a very, very good year as far as Sephora is concerned. I think it's going from strength to strength. The like-for-like sales are very, very positive. So I think it's a kind of luxury cosmetics positioning in the country. We open a few stores every year as the markets mature. But within its category, I would say it is an extremely vibrant and dominant brand.
Good morning, Kulin. This is Nantar also joining in on the conversation. So you're saying that Sephora, has had a great year. You're looking at that business very closely. You had a first mover advantage of sorts when you did bring Sephora to India, but this space has just become, the beauty and cosmetic space is just becoming hotter and bigger every year, with men also joining on the beauty bandwagon. So this is also still a non-core business. How will you scale it up? Look what's happened with the Nykaa. Tata has plans. Reliance Industries has plans.
I think every brand should be looked at in the segment that it performs in. The ATV, the ASPs, and the positioning and the offering of Sephora is very different from the offering of the companies you mentioned. So there will be multiple plays in cosmetics. There will be mass plays, mass premium plays, and luxury plays. All of them coexist. And as the per capita GDPs of the country pivot up, different segments will see different levels of scaling. Let's put it that way. But I think we are very happy with the portfolio strategy which we have, where our brands are very uniquely positioned in different segments. And each of those segments are looking very attractive. And being a dominant brand in a category has a very positive impact on how much of the value capture you can do. So, for example, in a US polo, we will possibly emerge next year as the largest brand in the category by far. And, with that sort of scale coming in, the way you can, it becomes a virtuous loop in a sort, in a way. And we believe, from a 3-4 year perspective, the disposable consumption and the S curve is so strong. Like China has multiple brands which are $1 billion. And in India, our largest apparel brands are, sub 2,000 crore levels. So I think, as we look at this S curve playing out in the country, in each of these segments, we are expecting, those step change in scale that come in at different junctures over the next 3 to 5 years.
So very quickly, because I know we have to take a very short break. We have to take a short break. Just yes or no would also be great. Will we see a super app? You're talking 1,000 crore plus brands. Super app has been, one of the big themes, from a DLF to an ITC to even a Dabur now talking about it.
I wouldn't want to comment on super app as a strategy, but our deep conviction is in what we call omni-channel, which is if you connect the online and offline journeys for the customer, you create a very strong proposition and a much better business model. So today, every store of Arvind, the inventory is connected to online. So whatever you buy from any of our own .com, now.com, or any of the marketplaces where we sell, the goods are delivered to you from very close by. You get the entire range of merchandise. The store inventory turns better. You have very exciting content which you are developing in the digital world. So today, we wouldn't have thought 5 years ago that more than 25% of our business would be online. And that's where we are today. And the way India is going, the share will just keep going up. And the core of that is the omni-channel model. I think that's the more relevant and powerful theme for the lifestyle space than that of a super app.
Kulin Lalbhai, it's always a pleasure talking to you. It's been 6 years since you last invited ET now to your factories in Gujarat. I hope we can come back and see what is happening there. You're, of course, experimenting with new textiles, which I believe will also be in conversation with the military, the denim, of course. We look forward to that factory visit.
We'd love to have you back, and you can visit our fashion studios in Bangalore as well. Thank you.
Okay, that'll be awesome.